The world is speeding up, and Sri Lanka is progressing with it. Succeeding in this time requires innovative strategies and a performance-driven mindset. For over 35 years, First Capital has put performance first in everything we do. We have optimized every aspect of our operation to deliver the highest performance and results to our stakeholders. As we march into the future, we are committing to elevating our services even further, moving forward with what we believe in to provide you with a premium service, delivering on our promises, finding the best solutions for our clients, going above and beyond to deliver value, and upholding the highest levels of professionalism. Rest assured, every step of the way, we will deliver performance first in everything we do. First Capital, performance first, always.
As you can see, our webinar series is organized by the Colombo Stock Exchange and is sponsored by First Capital. So for the evening, we have three companies of the Colombo Stock Exchange, three eminent personalities of these companies making presentations. So the three companies for the evening that we've chosen are Expolanka Holdings PLC, John Kills Holdings PLC, and Haley's PLC. So first, let's go into Expolanka Holdings PLC, and the presentation will be done by Mr. Shiraz Imamudeen. Mr. Shiraz is the head of strategic planning and business development of Expolanka Holdings PLC. He is an associate member of the Chartered Institute of Management Accountants, holding the ACMA qualification, and also holds an MBA from New Bucks University, UK. He has over 20 years of professional experience in the industry. So, Mr. Shiraz, over to you for the presentation.
Thank you, Nimanta. Good evening, everyone. Pleasure to be here. Thanking the CSC for organizing this event and inviting Expolanka to be a part of this as well. We can start the presentation now. Yeah, so before we get into the performance of the company and understanding our strategies going forward, I thought maybe we take a couple of minutes to sort of remind everyone here. I'm sure most of you are familiar with Expolanka, but remind everyone here about the profile of the organization and the journey that we have gone through, particularly I would say over the last 10 years. So if we take Expolanka today, we are the largest company on the stock market. We are one of Sri Lanka's largest logistics players. We are a global company, effectively a dollar-based company with over 95% of our revenue and profits derived from international markets. Always our focus has been, as with I'm sure with many corporates, our focus has been in generating sustainable returns for our shareholders and generating sustainable earnings. So with that in mind, I think it's good to just sort of understand our journey over the last, I would say, 10 years or so. Moving into the next slide. Yes, the company started in 1978 and it has a very checkered history, I would say, from 70 to 2011. So many businesses, a very entrepreneurial organization. But I think really the transformation of Expolanka happened in 2011, just around the time of the IPO or just before the IPO. With the IPO, what we realized was that we were at that time in about 30 different businesses. Different ROEs were generated, businesses with different scales. We realized that we needed to refocus our energies into businesses that generated the highest ROE, as well as had the capability of building scale in terms of revenue and profits. So we exited, we started a portfolio restructure project in 2012, 2013 period, and we were able to exit, I think, from almost 25 businesses during that time. All the returns or the cash that we were able to free up from those businesses were reinvested into the main logistics business. During this period, of course, what we saw was that current parent Sagava acquired Expolanka through a stock market transaction. I think still to date, that's one of the largest in terms of stock market transactions. When they came in 2014, they initially purchased 30%. Then the same year, further 21% through the mandatory offer, and to date, now they have almost 75.6% stake in the company. Sagava's entry into Expo actually gave us a lot of confidence as an organization, gave us the ability to dream big and to grow fast. And I think with that in mind, we embarked on an expansion project in 2017 into our largest market, the US market. Of course, this was done in mind, again with long-term thinking in mind, where we wanted to strengthen our operations in the core US market. We wanted to expand our customer portfolio. We wanted to service a wide range of customers across different verticals, as well as we wanted to strengthen our network, which, 34, we are present in today in 34 countries, in that time about 12, 13 countries. So we wanted to strengthen our network presence as well, and our infrastructure capabilities, our digital capabilities, our leadership team. All these things were part of this strategic journey that we embarked on in 2017. That has led to where we are today as a company in terms of the performance we have delivered and in terms of the earnings that we have been able to generate. If you look at the sectors of the group in the next slide, we have three core sectors: logistics, leisure, and the investment sector. Logistics is represented by EFL, our freight forwarding brand, our logistics brand. EFL is an asset-light logistics company. We are present in 34 countries, including US, Europe, Asia, and Africa. We provide an array of logistics solutions, primarily on the air freight, ocean freight side, domestic logistics, and a number of other related services. We are the logistics provider of choice amongst leading retail brands, apparel brands, tech, and automotive brands in the US, particularly. And based on the latest rankings, we are the 25th largest air freight forwarder in the world and 36th largest ocean freight forwarder in the world as of May 2022 Transport Topics rankings. In terms of the leisure sector, the largest brand within the sector is Classic Travels. Again, this is Sri Lanka's largest travel company. Again, a business that runs on an asset-light model, focusing on the service side of business. The largest portfolio within that sector is a corporate travel business. We have positioned ourselves within the leisure portfolio as an end-to-end travel solutions company. On the investment sector side, we have two businesses. One was the business that we started operations with in 1978, export of perishables and commodities. And that has now evolved into more of a value-added organic kind of a portfolio of export business. As well as we have an IT company within the group, which is servicing a range of customers in Sri Lanka across a range of IT solutions as well. Moving into the next slide, I think just a small introduction into who our parent company is, Sagava Holdings Japan, which was established in 1957. As I said, they acquired Expo their first acquisition of Expo happened in 2014, and they've increased their stake to 75.6%. Sagava is one of the largest domestic express companies in Japan, and they have an international presence as well. And their size in terms of revenue, they have a $14.5 billion revenue as far as the size of the organization is concerned. Yeah, moving into the next slide. Yeah, so in terms of the year in review, what I thought was we'll just run through this on a quarter-by-quarter basis, the sort of a story of how the year has evolved as the organization has picked up its performance over the year. So we started Q1. We were operating in an environment of disruption, a lot of uncertainty last year when Q1 came in. But what we did see was we saw a pickup in volumes, and there was a lot of disruptions on the ocean freight side. We ended up the quarter with a revenue of 95 billion rupees and a profit of 6 billion rupees. Moving into Q2, what we saw was that we saw a pickup of business again during Q2, and also we completed 2 strategic acquisitions. One was in Central America, our foray into the Central American market, as well as we acquired a domestic logistics company in the US. This is all strategic acquisitions, I would say, helping us fulfill certain gaps and demands as a business that we identified. We ended up the quarter with a revenue of 151 billion and a profit of 12 billion for that particular quarter. Moving into Q3, Q3 is generally considered the peak period of our business. We saw all-time high freight rates. We also saw quite a significant growth in our business during Q3 as well. Ended up the quarter with a 204 billion revenue and a 23 billion rupee profit. Q4 is generally considered in our business sort of a low peak season coming after a very high peak period. So what we did see was we saw a slight correction in freight rates. Volumes remained stable. We were able to complete a minority restructure project that we commenced a couple of years back during Q4 of that year. Also, obviously, with the depreciation of the rupee, we saw a positive foreign exchange impact on the P&L of Expolanka. I think almost 11 billion rupee impact of this 31 billion profit that we generated during the quarter. This obviously culminated with us generating a revenue of 694 billion for the year. We can have that on the screen. 694 billion revenue for the year with 121 billion profit, 72 billion rupee PAT. You can see the growth that we have achieved in all these key KPIs, as well as I think I pointed out earlier, one of the key focus areas of this organization over the last several years has been a focus on returns. We have generated ROEs of 95% and ROCs of over 56% during the year, and even the last year we had very strong ROEs that we were able to deliver to our stakeholders. If you were to sort of plot this journey that we have in terms of a graph, if we move to the next slide, I think we'll be able to see that. If you plot this journey, I think it sort of narrates well with the explanation I gave in the first slide in terms of how we have evolved as a company. So we commenced our strategic plan of expansion in 2016-17. Then what we did see was we saw a lot of new customers coming on board to our portfolio during the period from 17-18 to almost 19-20. We had built our infrastructure, built our capability, built our teams, built our technology to a certain extent by the time the pandemic rolled on. I think we were well positioned to meet the challenges of the pandemic. The most important thing was one thing that is sort of very unique. I wouldn't say very unique, but very synonymous with Expolanka is the fact that we are a very agile organization. We are able to adapt to market conditions very well. And when we closed 2021, we were able to generate a revenue of 218 billion. And we continued on this strategy of agility, continued to look at expansion initiatives. We didn't rest on our laurels. We continued to look at opportunities of growth and delivered our strategy. We generated a revenue of 694 billion last year. I think the next slide will straight away get into the sectors. I'm conscious of time that is in front of us. So we'll quickly run into the sector discussion of the 3 key sectors of the group. The largest logistics sector, which generates about 99% of our profits and revenue, again, an international-based logistics company. The logistics sector delivered a revenue of almost 690 billion rupees for the year, with a profit after tax of 71.9 billion. If you look at the logistics business, there are 2 or 3 key areas that we need to concentrate on. One is volumes, and what we did see was we saw significant growth in volumes year on year, and on a historical basis, the last year that we concluded was the year that we generated the largest volumes within the group on both our ocean and air verticals. Q4, we saw, as I said earlier, we saw a softening of freight rates which were still high, but it softened during the period. However, as an organization, one of the bigger challenges, the second key variable of our business is capacity and building capacity and getting capacity. So as an organization, we looked at various procurement strategies to build that capacity over the year in concern, not only over the last year, but even before that. This enabled us to maintain stable yields through the year. We were able to generate GP margins of close to, I think, 17% to 18% through the year. The largest portfolio, we'll discuss this in the next slide in more detail, but the largest portfolio of our business is the North America trade lane. And this sort of epitomizes who we are as a company. We are a North American-centric international organization where 95% of our revenue is derived from global markets. And if you look at our business model, basically, largely exports from the region into North America, region as in South Asia, Southeast Asia, and the Far East, export from this part of the world into Europe, as well as a bit of business within Asia. If you look at the contributions, North America contributed 84% of our revenue. The Europe trade lane, North America trade lane, that is exports from this part of the world to North America and vice versa, 84% of revenue. The Europe business, the Europe trade lane, trade between Asia and Europe was 9%. Trade within Asia was 3%, and then the other markets contributed about 3% of our revenue. If you look at all the trade lanes, we have seen growth across all trade lanes. North America, being the largest, has seen the largest growth as well. Moving into the next slide, we can look at the statistics that sort of drive the business and sort of explains to you the profile of the organization as well. Traditionally, we have always been an air freight-centric company. Almost 75% of our revenue has been derived from air freight. But over the last 3-4 years, with the expansion we did in US, focus area for the company has been to grow the ocean product. And this year, when we concluded 2022, almost over 40% of our revenue has been contributed by the ocean product. This is an important thing, shows the success of our strategies, the focus of our strategies coming to light. Both verticals actually have seen growth. Air freight 130% and ocean freight almost 3 times that at 370%. Looking at air volumes and ocean volumes, last year we closed the air freight with 198 million kilos, a growth of 51% year on year. But even compared to 2019, 2020, it was almost a growth by about 30 million kilos of air freight. Ocean freight, on the other hand, had an excellent year as well, almost 50% growth in ocean business. 281,000 TEUs of ocean freight. Again, largest. That's the most we have done in ocean freight throughout the history of the organization. Moving into the next slide, I think we'll be discussing briefly on the strategy that we have taken and hope to take going forward as well. So important thing I just want to take a moment to reflect on this is the strategy that we have adopted as an organization overall has been one of consistency. The strategy that we have pursued for some time. It's comprehensive, it's holistic, as well as it's integrated. It connects to each other, and that's the beauty of, I believe, the strategy that we have adopted. Along with this, our strategy has been agile as well. We have looked at market conditions. We have gone on a certain strategic path, but we have not been shy to adjust, to maneuver those strategies to meet market demands. I think that's a hallmark of a successful organization, if I say so. So we are looking at strategy from, I think, 3 angles. One is on the demand side, in a simplistic way, of course, on the demand side, on the supply side, and from an operational perspective. On the demand side, I think more of what we have done all this time in terms of consolidating our core market, which is North America, selective entry into new markets, to markets of opportunity where we see opportunity, where we see leverage, where we see potential for growth. We will look to consolidate our customer portfolio as well. Understanding our business maybe about 7-8 years ago, or maybe even 5-6 years ago, we would have had only about 7 to 10 key strategic accounts, so to speak. But today we have over 50-60 strategic accounts, which contribute significant volumes to our portfolio. We were very much an apparel forwarding company, although we still are apparel. The apparel vertical is the largest vertical we service. We have new verticals which are contributing quite significantly as well, the tech, the home furnishing, the automobile spares, the pharmaceutical vertical, which we have sort of broken into of late as well. So we have been able to expand out the industry presence that we service, as well as we have looked at expanding our service portfolio. A larger part of our business has always been air freight and ocean freight, but now we are growing the domestic logistics piece, the 3PL piece, in our key North American market, as well as in local markets such as Sri Lanka and India as well. In terms of the supply side, the largest challenge is obviously securing capacity with the supply chain challenges that we had over the last 2 years in particular. That was a challenge, but given the relationships that we have built over 10 years, over 12 years with the various carriers, with the network infrastructure we built in the origins, we were able to build more capacity as an organization by undertaking various proactive steps pertaining to that. From an operational perspective, various initiatives have taken place and will continue to take place in terms of our digital journey, our capabilities, and building our technology footprint. We will look at strengthening our infrastructure and our leadership teams across the various markets. We are at the end of the day a people's business, therefore it's run by people, and we need to have the right people in the right places, and that's something that we have been continuing to invest on quite a bit over the last several years. We will look at leveraging the brand reputation and integrity that we have built with our customers, servicing them in very difficult times, and the benefits that we are given to them. With that, we will look at building more and more relationships with our brand, as well as the capital structure of this organization, which has, I think, helped a lot in terms of building it to where it is today. Our balance sheet is strong. It didn't happen overnight. It was a journey of 10 years in strengthening the balance sheet, bringing in the parent company on board who believed in us and who supported us in this journey, and then building that dollar-based balance sheet, which has really helped us to grow to where we are today. I think we can start looking at the leisure sector now a little bit. That's the second largest business in the portfolio. So obviously one of our sectors that was significantly impacted with the pandemic last year. But what we did was, when the pandemic struck, we decided, look, this is a business that we want to be in, a business we want to grow. So let's see. I mean, there's no use complaining about what is in front of us today. Let's think about the long term and see how we can come out of this and how we can continue to lead once the pandemic conditions conclude. And I think that paid dividends. We restructured our business. We looked at areas of growth in that business. We decided to look at businesses that have the ability to scale up again, and we wanted to focus on bringing experiential travel solutions to our customers. And I think we decided to restructure this business a bit. We approached it in a resilient manner. We made it lean a bit more, and we were able to consolidate our market position during the last 2 years. And just on 1st of April, we acquired one of Sri Lanka's largest travel companies, Gabo Travels, as well, which is now part of our portfolio. In terms of market outlook, obviously, this is more of a Sri Lankan business, but with the current situation, it is challenging. Markets opened up after the pandemic, but with the domestic situation in the country, it is challenging, but we will continue to pursue. We are confident of this industry particularly and where it can lead us into. The last quarter was the best performing quarter since the pandemic. If you look at the numbers, we have grown significantly on a YOY basis on this business as well. Looking at the investment sector in the next slide. Yeah. So the investment sector, as it consists of two main businesses, the export operation and the technology company. Here, the focus was on stabilizing our performance. We again embarked on an internal restructure or realignment of our portfolios within this sector, looking at more higher yielding products, high yielding portfolios within this business. We saw a lot of challenges in procurement. This is commodity export business, so there was, with the fertilizer challenge and various other climatic conditions, we saw some challenges in this business. So we had challenges in procurement as well. I think we were able to overcome that. And on the IT front, we have seen encouraging growth despite all the challenges on a local scale of that particular portfolio as well. And lastly, I would just like to touch on our balance sheet a little bit, to talk a little bit about some of the key characteristics of our balance sheet. If we move into the next slide. Yeah, so I think here, maybe we can take a couple of minutes to reflect on what makes a company do well. So one is the profile of the organization and the business side of it. I think the second part is the balance sheet side of it, which concentrates on returns, which concentrates on the quality of earnings, as well as which looks at the efficiency of operations. Being an asset-light company, the largest asset that we have is our working capital, our database, our debtors, I would say the receivables. And this is where the focus of the organization has remained in terms of ensuring that there is comfort, there is visibility, and there is efficiency in our data processes, data management processes. And this is a question that we always get asked at various forums. Almost a 4 times growth in our data portfolio. We must remember that there's almost a 200% growth in our revenue. So the growth in debtors sort of mirrors the growth in our revenue as well. And our processes have evolved and improved over time in terms of how we have managed our receivables management process, customer onboarding, customer follow-ups, credit checks, credit profiles, all those things. It's a well-oiled machine that is running in terms of the collection side of our business. And what we have seen is generally forwarding business. You have global forwarding business such as ours. You have DSOs of about that is receivable days of about say 80 to 85 days. In some cases 90 days. On average, we have been able to bring this down to about 75 from about 78 in December, which we on a 3-day improvement in DSO with the scale of revenue is a big impact and a big improvement to any organization. So I think that's something that we have concentrated on. And the capital structure profile of this organization has helped the growth. We were able to deploy capital better, and we have been able to build a strong reserve base of 123 billion rupees, which we believe will help facilitate our growth going forward as well. And lastly, I think important to look at the ROEs and the returns generated by the organization. This year, our ROEs are almost nearing 100%, 96%, and ROCs are at almost 60%, I think 56% to that level. And I think our focus is to see how we can continue to generate strong ROEs to our shareholders. Thank you very much for hearing us out, and thank you again.